Hello traders and welcome to another video review. Today is Friday, December 19th, 2025. Let's take a look what do we have in the economic calendar for today. National core CPI and national CPI data from Japan in line with the expectations. No surprise here. New Zealand business confidence up from 67.1 to 73.3, and Australian private sector credit down from 0.7 to 0.6. Bank of Japan interest rate decision were in line with the expectations. The Bank of Japan hiked the interest rate from 0.50 to 0.75. Together with the interest rate decision, monetary policy statement and press conference has been released. Core retail sales in the UK down, but not that much, down from minus 0.8 to minus 0.2. However, this is slight of an increase, but lower than expected, so that's why they are down. Core retail sales down from 1.6 to 1.2. That's obvious, and retail sales improve a little bit from minus 0.9 to minus 0.1, but worse than forecast, and retail sales in line with the expectations 0.6%. Previous number, actual number 0.6%, and the forecast is 1.6. So big disappointment from retail sales in the UK. Germany down from 0.1 to 0. Consumer climate deteriorates from minus 23 to minus 26. We are waiting for the interest rate decision from the Russian Federation, scheduled for release at 11:30. Then we have data from the Canada core retail sales, new housing price index, and retail sales are scheduled for release at 2:30. Core price index in the US, and price index and personal spending, and that's about it. This data from the US are scheduled for release at 2:30. At 4 o'clock we got existing home sales. At 4 o'clock we got 1 year 5-year Michigan inflation expectations, consumer expectations, consumer sentiment data scheduled for release. 10 minutes later ECB Lane will give us speech, and then at 6 o'clock we got the usual Atlanta Fed GDP. Now at 7 o'clock US Barker Hughes oil rig count. So quite a busy day, including the interest rate decision from the Bank of Japan. So without any further ado, let's switch to the charts. We'll start with euro dollar. Euro dollar for our time frame chart is looking bearish. As we spoke last time, we got the bearish divergence here between the momentum and the price. As you can see, the momentum is already below the level of 44 points. As we dig deeper below 1.1709 towards the trend line support, breakout below the trend line is bearish, and we will see then movement down towards the 1.1683, 100 periods moving average one at 1.1672, or even towards 1.1656. So the outlook remains bearish on the euro dollar for our time frame chart. As usual, cable after the data does nothing. We got a little bit of the rally towards 1.3455, but then it was all faded, and we are back inside of this very small area yet again. So as you can see, we are trading in this zone. Today we've been trading in this zone for the last few days. This is the high from the December 16th, so that's whole week. This is whole week of trading for the cable. That's typical behavior at the end of the trading year. Okay, so there is only 2 weeks, not more than 2 weeks to the end of the year, which is why this trading is full of whipsaws, up and downs, range trading on the cable. US dollar versus the Japanese yen finally found a very nice demand zone, bounced strongly out of the channel, broke above 155.61, is heading towards 156.92, almost hit it in this go. Next target 157.14, and the swing high from the November 20th 157.89. Momentum is strong, very strong. Nevertheless, we hit the extremely overbought conditions. So please notice the situation when the US dollar versus the Japanese yen market might be pulling back a little bit. The nearest technical support 155.99. How about the gold? And the gold is still trading inside of the channel. Horizontal range. We have a breakout towards the all-time high 4,374 was less than $2 from auto high. Nevertheless, the move to the upside was faded. We are back inside of the consolidation, and we've been trading inside of this consolidation since December 20th. So it's been over 7 days now. The gold doesn't actually do any kind of a movement to the upside, movement to the downside. Steady trading with descending and decreasing momentum. So please pay attention to the gold. Sooner or later it will spike higher. S&P 500 keeps moving lower during the pullback. We hit the technical support located here at 4,615. There is a slight bounce from this level, despite the fact that the momentum stays at the neutral level. So this range here might not be violated if we apply the trend line. You can see that there is some kind of a breakout higher, but I think they all are fake breakouts, which means that we might see maybe just maybe a test of a 100 periods moving average 6,829. But nevertheless, despite this fact, we might see further movement to the downside on the S&P 500 quite soon as the correction continues. Crude oil rejected from the technical resistance at 57. Very nice morning star pattern, movement to the downside included, and we are back towards the level of 56. As you can see, very tight zone below the 100 periods moving average, the blue line, below the major technical resistance. Now the question remains whether this movement to the downside will be deeper, and we will test the swing low at 54.98, or maybe we will continue to trade inside of this range. From now, it looks like we are trading inside of the range, and the upside has been rejected. Bitcoin on a 4-hour time frame chart is full of surprises. We have seen the Bitcoin breaking above the trend line, breaking above the technical resistance, testing the 100 periods moving average, then yet again test of the trend line, new swing low, grabbing the liquidity, bounce back up. What is going on this asset ahead of the end of the year? It's quite interesting. So these days we got another pullback to the upside. We are on the almost at the 88,000 yet again, local high 88,403, and the market is getting closer and closer to the positive zone, positive sentiment zone, right? We've been there already yesterday, 56 points on the RSI when we tested this lower channel line, and it looks like the bulls really want to break back up to the channel, inside of the channel, but they need to break above the lower channel line and above the 100 periods moving average, which is located at $90,016, and this is the key short-term level, short-term dynamic technical resistance that needs to be violated in order for the bulls to move higher and the momentum to jump above the level of 50, 55 and 60. So we can say that bulls are in charge of this market. Otherwise, we are going to have this kind of a range trading, spike up, spike down, week up, week down candles for the rest of the year, even because it's Friday. It's the end of the week, almost the end of the week, and then there is only Christmas period and then New Year's Eve, and it looks like we might see some kind of erratic behavior on the many of the markets, and especially on the Bitcoin. So please stay focused, stay vigilant. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. Take care and bye bye.